Well, most of the people we had in mind are dead. So, we had some in mind from that group that is dead. And now we have another group. They may be dead also, based on reports. So I guess you have a third wave coming in. Pretty soon we're not going to know anybody. But we have, Venezuela was so incredible because we did the attack and we kept government totally intact. And we have Delcy, who's been very good. We have the whole chain of command, and they've been, look, the relationship's been great.
Operation Epic Fury enters day 5, and Wall Street is reacting. Everyone is asking the same question. Could this volatility be the beginning of a deep downturn? Welcome to the Big Money Show, everyone. I'm Jackie DeAngelis, along with my co-hosts Taylor Riggs, Dagan McDowell, Brian Bremberg, and with us for the hour, Rose Cliff founder and managing partner Mike Murphy.
Hey.
So if you dive into these numbers, history gives us a pretty clear playbook. When geopolitical shocks hit, markets spike and then settle down. Dramatic moves in oil, gold, and stocks fade within weeks, not months. Over and over again, markets tend to normalize. And right now, we're seeing exactly that script in motion. U.S. indices have shown resilience before, with bargain hunters stepping in after early sell-offs. So don't assume today's headline shock is tomorrow's long-term trend. A month from now, if history's lesson is consistent, markets panic first and pivot second. Savvy investors pay attention to both the shocks and the rebounds, and they look for opportunity. And Mike Murphy, that seems to be what's happening today. Now, we always say things could turn, something unexpected could happen. But right now, it seems like this operation is on track, as per the president and the rest of the administration officials. When I look at the stock market today and the sort of little bit of a tiny pullback in oil prices, I saw a headline this morning that some of the Western officials are estimating that Iran only has days of missile strikes left. And I imagine that that was part of the calculus, to hit them hard, maximum pressure, having the intelligence to know exactly how long they could go.
Yeah, this seems, number one, I love that you point that out for people watching at home, because, there is a tendency for individual investors to panic when there's this new unknown on the scene. But shifting to the operation, it seems like it couldn't have gone better for the United States and Israel. You have to throw in there as well, I think. It seems like it was planned well, it was carried out well, and the technology and everything that they wanted to accomplish, I think they're accomplishing. But I think the hard part will be, President Trump says there's more to come, or the big wave is coming. Mm-hmm. Kind of what happens. So we're going to win. Iran's not going to win this war. But what comes next? I think that's what the market, if the market has some clarity there, we're back. Fundamentals are going to push us a lot higher.
Okay. Yesterday, we talked about the Strait of Hormuz. And, Brian, we were talking about this insurance issue, the ships coming in and out, and not so much about whether it's going to be fully closed down or not, but whether they can get insurance. The president out on Truth Social, he said, effective immediately, I've ordered the United States Development Finance Corporation to provide at a very reasonable price political risk insurance and guarantees for the financial security of all maritime trade, especially energy traveling through the Gulf. This will be available to all shipping lines.
I love that he said at a very reasonable price.
Of course.
That it's so Trump. Look, we talked yesterday about you got to get ships in because you've got facilities that hold oil that's been produced filling up, and so you've got to get that on ships so production can keep happening. One thing I never doubted on this, and it's not easy, but you knew President Trump and Scott Bessent were absolutely all over what they would need to do to keep oil flowing and moving around the globe. And they did that in very short order. I think that's why prices have not spiked. They're down just a touch today from yesterday, which is awesome because we are in war in the Middle East with Iran. This should be spiking prices over $100 a barrel if it was any other era of American life, and it's not. And I think that's because we've got an administration that doesn't just know how to deal with a spiking oil price, but wants to. Can I just emphasize that? President Trump wants abundant, cheap energy. He's not against it. We're going to talk about New York State later, which is against abundant, cheap energy. We could talk about the last administration, which is against abundant, cheap energy. President Trump is for it. He's made it a priority, and I think it's showing through in the price of oil right now.
Dagan, yesterday you mentioned how rosy some of these headlines are. And there's reason to sort of look at that and have a little skepticism and say, something could turn, or is it as rosy as everybody is making it out to seem? Is there anything that's keeping you up at night about this?
Well, I'm glass half empty. I mean, it's war. And 6 of our men and women in uniform have already lost their lives. And we found out their names in the 6 o'clock hour, 4 of them yesterday in the 6 o'clock hour. So I think that's my starting point, is that people are putting their lives at risk. And I got on my hands and knees last night and prayed for those families and prayed for strength and comfort. So that's why I worry anytime there is a military conflict involving the United States. And I worry, just about people stationed overseas in hot zones, people serving this country, because freedom is not free. That being said, the markets, oil, stocks, it is absolutely astonishing to me at the reaction in the markets. The S&P 500, I'm just looking where it was close to the close on Friday, hasn't budged since Friday's close. It is flat. That oil, now it was up more than 14% in 3 sessions, but the fact that it is pulling back a little bit today, where you have very little traffic going through the world's biggest choke point for crude and refined product, I'm really taken aback at what's happened in the markets. And it's because investors expect that the U.S. will not be putting troops on the ground, boots on the ground, that the U.S. can control Iran's ability to have missiles, drones, and nuclear weapons, that this will be short-lived. And maybe even President Trump, the money that we have spent in this so far, will get all of these other rich countries, and they are rich and getting richer as oil goes higher, to kick in and pay for some of this, or a big chunk of it. So that's what the market is telling you, that this will be buttoned up in short order, that Iran will be contained, and potentially, and you watch what happens in the coming days, that Iran will maybe rejoin the world. Also, and Taylor can talk about this, the U.S. economy, we are well supplied with oil here. We have plentiful natural gas, great refining capacity. U.S. crude, West Texas, is at a deep discount, has been for a couple months, of about $7 a barrel to Brent overseas. We are okay, even though oil and energy commodities are priced globally. We are okay in terms of supplies. This is not a supply shock. Prices might go a little bit higher. And then our service economy is great right now.
I'm really glad that you brought up the 6 service members, because you talk about Iran joining the global economy, and while I'm very happy about that for obvious reasons, and I've talked about my background and sort of watching the brutality of this regime for 47 years against its own people, that's really difficult to watch. But I have not been celebrating as this has been happening, because lives are on the line, not only our military, Israeli IDF forces, and civilians on the ground. And I don't celebrate war, but, if it all goes to plan, Taylor, and the markets are saying that it should, we had said yesterday, you buy these dips, you can come out when the global economy is chugging along, more benefits of the big, beautiful law, manufacturing and other types of growth here at home. This stock market could be positioned to rip.
Yeah, so we talked yesterday about an oil-driven price shock. What would need to happen to have a sustained 15% drawdown in the S&P 500? One of the factors is that you would need an economy that is teetering on the brink, and then this pushes us into recession. We are so far away from that. 2 data points this morning. Dagan, you talked about ISM services. Let's do that. The services sector right now is on fire. It just jumped to the highest since July of 2022. The business activity component within that jumped to almost 60. That is 5 points above the 6-month average. Industry breadth within the services sector improved. 14 out of 18 industries reported growth. That was 11 in January, and that number was 3 declined in the month prior versus 5. So you're seeing more breadth and health within the services sector. ADP, we talk about, not really correlated against the unemployment figures that we get from the government, but still really good. You added 63,000, so when you get the revision number lower, came in as expected. Here's the good news. Very small businesses, you have employees fewer than 19, you just added 59,000 jobs. So the smallest of the small businesses are the ones that are adding jobs. I like that. I don't care if you're over 500 employees and you're at, I care, but you want the small guys to win. And right now it is. On the good side, construction added 19,000 jobs. So just from the data we got this morning, you could have an equity market that maybe is trying to search for a bottom yesterday, pricing in a quicker than expected war, but also really solid economics that can withstand some volatility within the short term. So, Jackie, that's the case. And stability within the bond market that I think, Dagan, as you've talked about, so important for an equity market rally.
Mike, I just want to ask you about this poll, Fox News poll from February 28th to March 2nd, registered voters. The opinion of the U.S. strikes on Iran is exactly split 50-50. 50% approve of what the United States is doing, 50% disapprove. How does that play into the action that we're seeing carried out? And also, I sort of think about that, how investors look at the markets if they're so split. That's not to say Wall Street is. These are normal people that are polled. But I just wonder with that divide there.
Well, 2 parts. I think, number one, as far as the administration goes, President Trump, Pete Hegseth, I don't think they're going to be swayed by a poll, however it comes down. I think they have a mission in mind, and the only outcome they see there is victory. So I think that won't impact them. But when it comes to the markets, that if it was a very negative sentiment toward this war in Iran, I think the markets would have had more of a sell-off. So, polls you have to be careful with, but I think the messaging coming out of the White House, where they're keeping us up to date, informing us on what's happening, you can argue there's too much information coming out and too many videos coming out, but I think they're doing a good job of explaining to the American public at large what their goal is and what's happening.
I think that it was a really good answer to the question that I was trying to frame, which is if there's uncertainty or indecisiveness, how is that playing out? Well, the market is telling you that it has more confidence than not.